house where I'm going to stay. I look at it as not an asset, as a liability, right? Because I'm staying in it. It's not giving me rent. It's not giving me anything. Only expenses going out.
Correct.
So 2030 is when I would think of buying a house. After I hit a capital target of 8 to 10 crores.
Okay.
After that, I want my...
What does that mean, capital target?
So today I have a capital of 2 crores.
Okay.
Right? I want to keep growing this, investing. I have 6-7 years to do it. I should reach my goal is to reach 10 crores when I'm 40. So I have 8 years to do it. I'll get there. Just by compounding, I'll get there. So I don't have to do something crazy. If I reach a 10 crore capital of my own, then just from interest, I can make a nice house. Again, I won't go over and beyond my luxury. I'll maybe put 1-2 crore down payment. And with the remaining 8 crores, I'm still growing in the market. That will pay off.
So I recently went to Bangalore last week. And as soon as you land in the airport, you see all those new properties which are coming up. Very interesting thing in Whitefield where you get these villa
projects
in the in the vicinity of a jungle, and I saw some 12 crore property. Look very, very
4-5 crores has become normal now.
4-5 crores
become normal. 12 crores is ultra luxury.
Correct.
I would, if I have 100 crores, I would definitely buy a 12 crore house. But if I have 15 crores, I would not buy a 12 crore.
You would spend like 2-3 crores.
Yeah, I would put down payment of 2-3 crores, take everything on interest, and see that's what the beauty is, right? Interest is what 8.4% is housing interest. Market is giving more. In fact, gold is giving more than interest. Leave market. Market is also giving more. Why would I lock myself with interest today when market is giving more? There will be a point where market doesn't give me a lot. That is when I start buying this. Because if market is down and we're in a bad state like a recession, housing property prices have to come down.
Right.
So you've made your chunk here and now all the guys are selling at distress sale. That's when you pick up.
So we talked about, expectations in the market.
Yeah.
You said that the expectation is around 18 to 20% returns.
Yeah.
But how do I get started? Assume that I have no degree in finance. I'm not a CA. I'm not a CFA. I'm not an MBA degree. Right? How do I get started?
So I think that's a myth also. So I'm not a CA. I'm not a CFA. I just like numbers. I learned it. Undergraduation was in finance. But I would say I'm not even close to a CA's knowledge with respect to accounting, right? But I honestly believe that people overcomplicate investing. It is not that difficult. It is more with common sense and logic. But I can make it sound very complicated to look smart. As simple. I'm a quant doing this, alpha, beta, gamma, market neutral. I can also talk about all that. At the end of the day, you're buying something, selling something with the hope that it will do well. With the logic, it will do well. So if you ask me, if someone wants to start off, definitely start reading a lot about one sector. Pick one sector. Become the king of that one sector. I started this. I had a goal. Every year, one sector, I become the king. So anything happens in that sector, I will know at the back of my head. I don't even have to open the company. So I took IT sector as my first target. IT is very big.
But how do you start? Like, let's say I have no degree, nothing, no finance. I only have is Google in front of me or ChatGPT, whatever it is. What do I type?
So go to a website called screener.in, free website. Okay. Go look at all the top IT companies. There's TCS, Infosys, HCL, all the top guys. They all release something called investor presentations. That's your first way to go. Okay. First thing to read investor presentation. It's a PPT. You have to read a PPT. Read the PPT, understand what TCS is doing, understand what is the growth part, what are they investing in, what are they doing. Second, it is more tedious. They have something called conference call. Okay. Every investor does a conference call. It's a 16-page document. Read it. Or upload it to ChatGPT or Claude and say, give me a summary of this. It'll give you a nice summary.
You do that?
I do that. I just put it up and it gives me a summary. I read that. Third thing what I do is after understanding the sector, understanding this, I do it for into 10, into 20 companies. It takes time. Third thing, there's a website called Value Picker. Again, completely free. It's a forum of people just talking about stocks, individual stocks. So you search, let's say TCS, you go and everyone smart guys in one room talking about everything. Good and bad, unbiased. So I would say there's no shortcut. You have to read. You have to become knowledgeable. Every person in the market who's become rich, whether you take Rakesh Jhunjhunwala, Ashish, Warren, everyone has a common thread that we have read. Okay.
Correct.
Once you read, you understand patterns. Once you understand patterns, you are more
Give me an example. So 1 year, let's say I picked a sector.
You know TCS. Let's say IT sector, you're a king now. 1
year I did all of these things that you said.
Yes.
I went through the investor presentation.
Yes.
I went through the con call transcripts.
Yeah.
I will also go to Value Picker and see what people are talking about these stocks. I do this for 1 year.
Yes.
And I become very knowledgeable.
Yes.
Then you mentioned understanding patterns. Can you give me an example of that? What do you mean by that?
I'll tell you. Now, very simple actually. AI became a new trend. We realized AI is going to become inevitable. Again, AI is inevitable, right? If AI is going to become the next big thing, what do you need to fuel AI? Chips. Okay. So what was the only chip manufacturing company in the IT world?
NVIDIA
and AMD, both. So you have only two options. Or Intel is, I would not count Intel in the race. NVIDIA and AMD. If you take a bet on both, when the AI gen started, you would have made money.
Correct.
Someone has to win. So the same applies to India. You come back to India and say, if I'm looking at...
How much NVIDIA shot up since the AI boom happened?
I think almost 4-5x easily.
Okay.
Actually more, 10x, 12x or something it went up.
Okay.
I know people who joined with ESOPs who have become millionaires now.
Okay.
Right? So, but it's very simple, right? It was common sense, right? If AI has to do well, computing power is going to increase. Now I'll tell you the second step. With AI coming into the picture, data is going to become more and more important, and data is inevitable. So you have to have data centers. So now if you have data centers, somebody has to provide technology to data centers.
Yeah.
Now you are Sharan, who's done entire research about the IT space. Now you know exactly which company is now planning to enter the data center with a product. You're going to make money now. Now, is it going to happen today? The data center will come after 3 years.
It's because I've already read some investor presentation of a company, of a data center company.
Not data center, IT company who's saying we are now making a product to supply to data centers.
Okay, again, backward integration.
Yes.
Of that. Okay,
yes.
Got it.
So data center has to use some tech. And you have read con calls, so much you've read, and the CEOs only are telling you that data center theme is picking up, and we're currently talking to a customer in the data center space to build a product for them. That's your cue.
Interesting. Give me another example of pattern recognition.
Okay, cement industry.
Okay.
Very interesting. Okay, this is something that a lot of people are talking about. So if you look at cement industry, first thing you look at, little macro. What is happening? Adani went and bought 2 companies, Ambuja and ACC. Now he bought another Pinar Industries or whatever. 3 companies he's bought. Ultratech Cement, which is the other player, has done the biggest capital expenditure, means manufacturing plant, biggest till date. So this guy is doing it. Following him, all the cement companies are now doing huge capital expenditure. Now you might say this is crazy because so much cement will come, more revenue, more growth, etc. But also, this has to be funded exactly with the growth of the nation, infrastructure demand.
Correct.
So, if the infrastructure demand has gone up by 20% and the demand has gone up by 20%, supply has gone up by 20%. So, it normalizes. But what if the demand doesn't go up tomorrow? What if the road projects get delayed? This guy's made a huge capex and he's sitting. So, he's going to underutilize his factory. Then what will happen? He will start selling at lower prices because it's commoditized. So, margins can get affected. So, now automatically you know that this is risky. Right? If this theme doesn't play out, then cement companies will start losing money because they have to now have price war. Because everyone has inventory, they have to sell the inventory somehow. If this comes up by 20%, this should support it by 20%. This is ready. If this fluctuates, so tomorrow if they increase the allocation in the next budget,
so it has, no budget has come out, no?
It's the same.
They have not increased the allocation.
The infrastructure budget has not gone up so much. Defense has got the most, 4 lakh something crores it's got.
Okay.
So this is ready. We knew this information. So companies got ready for this information. Now tomorrow if something goes wrong and this falls down, I would start shorting these companies.
Oh, how do you short? What do you mean by short?
Shorting means, and again, in the futures, as I told you, I would take a short position on it. I would sell
You're betting that the company stocks will go down.
Yeah, and the next 1 month. So that way. Or I would not touch that company if I have any positions, exit it as a normal investor, buy some other company.
So one question I have, Shashank, is that why should I research about all these things? Why should I keep myself updated about the individual company's performance? Why should I read about the macroeconomic changes in the world when I can just give my money to an expert fund manager, like a mutual fund company? Like, why should I put in all of this effort? Because you said it takes a lot of hours and research to do all of this.
Yeah.
Why should I do all of this if I can just give my money to a mutual fund manager?
So I would say it's not wrong. What you're saying is also completely right. I know so many people who have become rich by focusing on their job, getting huge bonuses, huge salaries, and the bonuses goes into the mutual funds.
Yeah.
And they have made good amount of money in the last few years. The people who want to make 2-3% extra and you believe you are smart enough to beat a mutual fund manager, then those guys should come into this. But the problem when you come into this is you have to give time. So if you ask me, I work Monday to Friday in a job, and then Saturday, Sunday is when I do my full research. So 2 days, I spend almost 3 hours each day and I do research. Randomly, my favorite website is Screener. I simply go check what's happening. I look at all the stocks.
That's like scrolling through Instagram for you.
Yeah, that's my scrolling to Instagram.
Okay.
Right? I don't.
So it should become that enjoyable.
Yes. Okay. And even the people I follow, I mean not follow, but my Twitter feed is only stock related. So I understand the pulse of the market. So I look at what's happening, what theme. I look at my friends on YouTube, what are they posting. I look at their videos also. In India, people always look at competition, right? I look at not competition. I'm like, okay, he's identified something that I might have not seen. So I'm going to make money out of him. Thank you for identifying this theme. I'm going to watch your video and I'm going to make my own brain and put my money and make money. So I look at all of these things. So yeah, reading, watching comes a lot.
So 2 hours every weekend. Sorry, 2 hours, 4 hours every weekend.
Yeah.
So in a month, you're spending almost 16 to 20 hours
easily
researching about the market.
Easily.
So if you are somebody who can commit this kind of a time, only then you should venture into the
Yeah.
markets.
Yeah.
Right?
Or else mutual